made to heaven. I worked for Ecolab my entire life, spraying for cockroaches.
Okay. Let's go. Go. Let's go. All right. Amazing day. All right. Amazing day. The sun is shining. You have, air in your lungs. Your skin is smooth. Yeah. And you're able to put a smile on your face. Guys, we are looking at the financial markets. We are here looking at GBP USD, the Great British Pound against the United States dollar. We predicted, we analyzed this market from Monday, and we saw how this market made an indication of an area of consolidation. All right. And then we was expecting to see some sort of correction to close up some imbalances. First one was a 4-hour imbalance that sat in here. Okay. And the second one was another 4-hour imbalance in here. And we didn't know whether the market's going to just close the first 4-hour imbalance and break structure, or it's going to want to push into this second imbalance over here. Okay. Now, what we have done is we pushed into here, came back down to structure, to an area, a level, then we pushed back up into this 4-hour area up in here. Now, at the moment, I'm going to trade what I see if I see it. Now, what does that mean? That means that at the moment, on a smaller time frame, we've seen this market push up after it's here. This is it closing this imbalance. We had some volatility that came in the market here because of some news. But the market ultimately is making higher highs. Have a look at it. It's making higher highs and higher lows and higher highs and sideways a little bit and high. But in no place anywhere has this market indicated plus structure. Let's understand what that means. That means that the structure was doing this, making some nice little steps. Never in that journey did that market indicate breaking some structure, correct, and then continue. Hasn't done it in this whole journey. All right, from these 4-hour imbalance all the way up, even from before that. So right now, after tapping into this imbalance, now it hasn't tapped 50% into that imbalance. It has just dipped its toe in there, which is a bit of a concern. However, we cannot dictate how much of this imbalance this market wants to close. This is out of our control. Okay. So it might just say, it wants to dip its toe there, it's done enough work. What do I mean by that? Let's zoom out on a 4-hour. Let's have a look. We can see it. We close this imbalance. We can see that right now, I'm going to try and remove some of this stuff. Doesn't need to be here. So I'll get rid of this. Okay. I'll also, get rid of some of these little bit areas here. But we can see that where we are here, how the market has dipped its toe in. And to be fair, I think it has maybe pushed in 50%. Let's try and draw it a little bit better in between here and here. Very close to 50% of the imbalance. Not quite there, but that can depend on how I've drawn it. That can depend on the candles coming from Owanda, etc. So this wick is not too bad. I thought it was worse than what it was. I thought it only kind of dipped its toe in here, but it's actually pushed in quite deep. This is exactly what we discussed on Monday. If you don't believe me or remember, go run the tape back. Yeah, go and look on YouTube. We spoke about this. We spoke about this first coming into here, and these were the options. The options was it came into this 4-hour imbalance and then decided to come this way. The other options was it came into this 4-hour imbalance, had a reaction, and then decided to go for this other 4-hour imbalance. And then hopefully from here, we're going to see this melt and go to hell. Okay. So therefore, we have seen this play out, but we was able to capitalize on both this push and this push. All right. Now, if you didn't, that's fine. Ultimately, this market here, I want to be in it for the sell. Ultimately, I'd like to be bearish on this market. Okay. Now, why do I want to be bearish on this market? I'd like to be bearish in this market because I believe that this market is in a premium. All right. Now, you heard us, play some other educators and podcasts and stuff like that. And, one of the guys, he said, trading's quite easy. It's simply the market likes to move from premium to discount. I was like, oh, this is singing from the same hymn book. This is all the market likes to do. All right. It moves from a premium to a discount. If you think about it outside of trading, this is what everybody wants to do. They want to move from premium to a discount, from a discount to a premium, from a premium to a discount, discount to premium. That's what they want to do because they want to sell when things are expensive. They want to buy when things are cheap. I don't see that changing. All right. So right now we can see this market came up in here to this premium level, which happens to be this yellow line. Now, this yellow line, let me let you know, is simply a line I've drawn on my screen. It's not millimeter perfect. It's an area. It's saying that this area, as easy as I've drawn it as a line, I could draw it like this as an area, like so. Okay. This market likes to come up to this area and sees this area as expensive, as a premium, Gucci. Yeah. Gucci prices. Yeah. And therefore, people are thinking to themselves, wow, I've got a box of white t-shirts that I bought for nothing. And people are willing to pay Gucci prices. Let me sell them all. Let me sell them all, because for some reason, everyone wants to pay Gucci prices. So therefore, we expect to see some sort of reaction from these areas. And we have, look, we saw one reaction from here, boom. But the market thought about it. The market got down to this level and said, I don't know. Push back up into this level again. Hasn't made a higher than this high over here, but we are back up against this premium area. Now, that doesn't mean we just hit the button. We're not paying snap. All right. We are traders, and we are trying to fight our natural proclivity to doing dumb things with money. Yeah. To not having the psychology and understanding of being able to wait for, confirmations. Now, if I drop to my 4-hour time frame, it gives us more detail. Okay. Time frames are used for detail, just like a camera, the aperture of a camera, you're zooming in, twisting it. That's what the time frames do for us. Obviously, on a much larger time frame, how are you going to hit a bullseye? If I put a bullseye up and I put you in space, how are you going to hit that bullseye with a dot when you're looking at, from an overall picture? The only way you're going to be able to do that is by zooming in to be able to see exactly where that dart is, where that dartboard is, for you to try and hit the bullseye. So that's what happens with time frames. However, do we think it's going to be easier for you to hit the bullseye from space, or is it going to be easier for you to hit, the island of Dominica, with a nuke, opposed to hitting a bullseye with a dart? Well, evidently, it's going to be easier if you had a nuke, you had a bomb, to hit the whole island. Okay, opposed to, and it's easier for you to get your decisions correct on a higher time frame. However, it has less rewards. It's more of a blanket approach, like a bomb would do. It's more of a blanket approach. You want to take out one person, you hit the whole area with a bomb. Okay, so what am I saying now? I'm just saying that ultimately, we do not have to go anywhere lower than 4 hours if we wanted to. We could look at 4-hour structure, waiting for 4-hour indications, corrections, and continuations. But for you to take one successful trade that might go for a 1 to 2 might take a month or 2 months of your life. Okay. So what we do is we get a little bit more surgical with it, and then we understand what's going on from a larger perspective. And then we zoom, because we understand that our strategy works on all time frames if we can respect the strategy. So as we can see here, we're on an hour time frame now. It's getting a little bit better. Now I need to wait a whole hour for a single candle, but it's a little bit better than waiting a whole day or wherever we was at in these higher time frames. And we can see that the market was in here. For some reason, the market, decided it didn't really want it to break this level. Okay. It kept coming down. It wasn't making higher lows. It was making these equal lows relatively. Made this highest point here, which someone could turn around and say that when this market was kind of in this kind of energy here, that this could have been a nam liquidity grab, a grab of liquidity. And then the market's running the opposite after touching. Remember, this is our, think about all the confluences we have. We are at the top of this premium yellow line. All right, dancing around it, and boom, tick. Yeah. We have also pushed down and we've broken some structure here. Look, tick, indicating where we want to go. After indications, we understand we like to see corrections. The market has started to correct. This is another tick. After corrections, we want to see continuations. And that's what may or may not be happening now. Also, when we look at, sideways. This isn't sideways. Well, let's say for argument's sake, we look at this as being some sideways action that's happening in here. Yeah, masked into making higher heights, masked into looking like it was going higher and higher and higher, but making equal lows, equal lows, equal lows, equal lows. Well, we don't really want to see this market price action, sorry, pushing past 50% area of the previous consolidation. We do not really want to see that happen. I'm not trying to say that when it happens, it's the be all and end all, but this is another bit of confluence for us as traders that we have seen multiple times, that we don't want to see it break that 50% level of this consolidation, this box in here. All right? We don't, because there was already a battle going on in here. And we're making the assumption that we lost that battle because the market wants to push down in here. You know, it's like, imagine that you're having an argument or a fight with somebody and you told them move from your doorstep, and you dashed them out your doorstep and they started to walk down the road. If they started coming back, you're expecting them to stop at your doorstep because that was the whole reason of the argument. You're expecting him to start working his way back into your doorstep, into your front garden, and trying to come in your house, because then he's either knows something you don't know and he's got very, very brave, or your message didn't communicate very well. All right. So therefore, we've had this argument move. We don't want to see the market come back past. We want to understand, I don't want to get another slap and start to make its way in the direction you told it to go. Now, understand my metaphors. And I'm going to have loads of them, throughout our journey, as you know, okay? But it's on the basis that you can, take a different approach to these markets, a more, common sense, a more relatable understanding of what's going on, because this is simply a marketplace. Could be a marketplace for cheese, for fish, for fruit and veg, okay? And ultimately, this market is dictated by psychology and human behavior, herd mentality. Yeah, it's affected by the things that affect you. News. If you heard that there was, something, when we heard the news of there was this crazy disease infection going around of COVID-19, we all reacted to that news. We didn't know anybody. There wasn't people walking around in the streets bleeding from the eyes and the nose. It wasn't like, the zombie movies that you've seen. It was some news we heard that was pushed via, the government with their own agenda, and told us all about this thing, that the way we protected ourselves was in this way. This was news we heard, and we reacted to that news. The markets also react to hearing news, all right? We can go and look at some of the scheduled news for markets using a website such as myfxbook.com and their economic calendar. All of these things that we see here are news, yeah? Relating back to my very strange metaphor, these are your COVID-19s. These are, don't go outside because it's too sunny. Don't go outside because it's too dark, There's chemtrails, there's something else that's happening, there's going to be this, there's a war. These are all news. And if we thought to ourselves, oh my gosh, I heard, was it one of them, Richie said, one of them said, everyone should have some cans of beans and things stacked up in their house and some nuts. I hear this stuff because my mom tells me, Jay, did you hear my man said this? Blah, 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 blah. Do you know what my mom does? I might laugh and joke about it. Like, this guy's a clown. Was he telling people that they need, a war provision just in case? My mom goes to the supermarket and sorts it out. She has a reaction to that news and goes, boy, I'm getting my 2 cans of this and a couple cans of that, and boom, 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 boom. And I'll go to the yard and see it this there. And I'll be like, what's going on? And she'll be like, yes, that's me. I know if end of the world comes, I go to Mumsy's house, we're going to be good. We're going to be at least good for 6 months. I know, because she has a reaction to that news. So we have to understand the markets can react to that news, but ultimately the market is a market. So I'm looking at this market, I'm looking at it in a premium, and I'm looking at the price action. What is the price showing me? Is this price, by breaking this structure here, where there was liquidity, yes, below here, breaking that level, this was a strong level, What's it show me? Is it show me that it wants to go down? Maybe. Because it's broken a level that previously was very strong, was acting as quote unquote support. Yeah. It broke that level, said we don't care about that level. Meaning, if we want to put another layer of understanding, that the orders, the unfilled orders, buy orders by people who want to buy this market have dissipated. They disappeared. They were here before, then they disappeared. Maybe there was some more down here. Yeah. Or maybe the market just said, oh my gosh, we're so inefficient. You know, we're so inefficient. We left these huge fair value gaps is another language we hear, another word we hear. I like to say imbalance. Yeah. We left these huge, let me rewind it, have a look. Let's go back to that world. The market was making some, fell out of space all the way from up here. Zoop, 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 zoop. But as it was coming down, have a look here. Even when it pushed down in here and left a little imbalance, the market came back up in here and tapped into that imbalance 50%. What do I mean 50%? I mean, if I drew a little rectangle between this imbalance here and here, this market whipped up just a bit less than 50% based upon how I've drawn it. Maybe I've drawn it a little bit poorly, but whipped up into that level to give participants in that market an opportunity to buy around this price. The market kept going, look, leaving no imbalances until here, boom, 4 hour, one big imbalance left open, another big imbalance left open on a 4 hour time frame. It's quite a long time. It's quite a long time if you were standing in the queue waiting to try and sell your product or at this price, and the market just flew past you. So we understand, we identify, we see that, and we can see how the market within that period, within an hour time frame, said, you know what? We need to go back over here, man. We left so many people standing in the queue. They're going to write some bad reviews on Trustpilot. They're going to be cussing some bad word to everybody in the community. Nobody's going to want to come back to this market again if we don't give these people an opportunity to sell at this price. We moved through that price so quickly on a 4 hour that we left inefficiencies. So what does the market do? The market says, all right, fair enough. Close one imbalance. Are they happy? Are you happy, mate? I closed your imbalance. Well, I'm a little bit happy, but I'm not going to lie to you. My cousin, Alan, was standing further up the queue, and he too got run straight past in this imbalance. And the guy goes, oh, gosh, we really want to go down, but I'll tell you what, we do like you. We like your loyalty, and Alan's a good customer. We're going to go back and give him an opportunity also to get involved. And that's what the market has done. If I get rid of all the drawings, see, just keep your eye on this imbalance here, all right? Which I identified 4 hour imbalance. The market came all the way back up in there. Now the question is it done? That's the question. Does this market want to push all the way back and really close the door, really give Alan and everybody else that was standing around Alan an opportunity to buy? Or is this market even thinking to himself, now, you know what, true, we're coming back up in here, and so many people love buying this product. Should we just keep running the price up? Should we go back over here? I don't know. Maybe this little imbalance that I said to you that the market tapped into a little bit, maybe it really wants to go in here and sort out that imbalance again. Put this market back into a premium. I do not know. I wish I knew. Because if I knew, I'd sell my car, kids, my rings, my watch, everything, my house, everything, everything. And I put everything on wherever I know this market's going to turn around. I don't know. Neither does your favorite YouTuber or your favorite trader that says he's the best. He doesn't know. Sorry to burst your bubble. We don't know. Okay. But we have an edge because we understand how to read the markets. It's like reading a book that you can't skip forward in pages. You're reading a book, and when you open the book, that page is blank, and then the words start to populate, and you're reading it because you can read the language. First and foremost, you need to read the language. If it was written in Japanese, who cares if it was populating in front of you? You can't read Japanese. But you can read this language, and now what you're doing is you're reading it As new information is presented to you, you're going, oh, more of the story is revealing itself. Oh, okay. He's really, he's the guy who did the crime. Oh, okay, that's the love interest. You're reading the information as it's provided to you, and you can read and react to the information. You can say, oh my gosh, he's the killer. He must be the killer. Yeah, you've seen the information. Then you can make a decision. I think he's going to do X, or I think he's going to do Y. All right, that's how we trade. Alternatively, you can zoom out and you can be like, I don't really care who the killer is. I know that the black guy's going to die in the end. I just know. That's my opinion. I've seen what's happened here. I've seen this movie 10 times. I know the black guy's going to die in the end. That doesn't mean you can't really tell somebody what happened in that book. You can't tell them details. You can tell them the black guy's going to die in the end because you just kind of know. That's you zooming out, saying, you know what, I'm going to take a trade, and I believe that trade is going to be bearish, and I'm going to hit here. I'm placing my stop all the way above here on the basis that I can kind of see that the market's going to at least push down here, give me an equal low. Black guy's going to die in the end. Now, that's only a 1 to 1.3. But based upon, I don't know, if you looked at the larger market structure, you're probably going to be correct. Because you're not saying that it's going to happen now. You're not going to say it's going to happen next week. You're just saying at some point, you think that the market might get down to here. You'd be correct. You wouldn't be very accurate, and you wouldn't be that profitable unless you can do this multiple times and you have the patience to do this constantly over a duration of a long period of time. But you would make your 1 to 1.3. Okay. But we are trying to be a little bit more surgical, which is more difficult. I'm telling you, it's more difficult. And we're trying to zoom in a bit to get more information. But when we zoom in, we are victim and subject to the volatility that exists, especially in the Forex markets, more than the futures markets, more potentially than the stock markets. Because when we're dealing with a Forex market, which is a derivative product, all right, we're dealing with this thing against this thing. So we've already got two kids to keep our eye on. All right. Secondly, we're not dealing with an actual thing. We're not dealing with something tangible. We're dealing with a concept, the price of one thing, or not concept, but the price of one thing against the price of another thing. It's called a derivative. Yeah. Whereas if we was dealing with one thing and we're like, okay, we're buying, I don't know, strawberries, we might know that there is a real demand for strawberries right now. We know that there's been a big expose that came out and strawberries, make you live longer. And we know that strawberries are probably going to do very well this season. That's the only thing we've got to worry about. We don't worry about strawberries against something else, whether this one's going to be more, interesting than another thing. So these Forex markets, which, last time I checked was something like a $6 or $7 trillion a day market, are quite volatile. But that volatility is where the opportunity lies. And what I'm going to say to yourself is this: all you have to do is be able to learn how to survive and wait till the sun shines on you behind, when it's your day, when it's your time, to be able to understand and take advantage of this volatility. What does that mean? That means being able to understand when there is an opportunity. Have a look. I spoke when I first came in the call and I said this market here was making higher highs and higher lows and higher highs and on a small time frame, i.e. the time frame you can see, which is a 1 minute time frame. I even drew this in when this market broke this structure whilst I was talking to you. If you don't believe me, run the tape back. I drew this in as this market broke structure, indication. But the market is now just still correcting, still pushing up into these levels. You haven't heard me turn around and say I'm in no trade, because I need to see an indication, a correction, and then a continuation And ultimately, when that market closes below this level here, gives me the opportunity to enter the trade with my stop above the last high or the swing high. Now, if this market doesn't do that, because remember what I said, it didn't fully close this imbalance. This market is allowed to say, I was only joking, and keep going this way. It's allowed to do that. Okay? And someone's saying, well, if it's going to do that, why don't you get in for the buy? Coulda, woulda, shoulda, maybe, might have. Yeah, I could get in for the buy, but I've already explained to you that ultimately I would like to be in this market for the sell. And let me tell you something else. If I was going to get in for the buy, I would like to be buying this market from a discount. So within the range, if I zoom out, have a look. Within this energy, let me make it a different color, of this market making higher highs and higher lows. If I was to put a top end on it, like so, okay, like so, or even like so above this area here, either way, doesn't matter. I would be interested in buying in a discount. I don't really want to buy in the middle of the range, or even if we're taking into consideration this angle here, in a premium. I don't want to buy things when they're the most expensive that they've ever been. I want to buy when they're cheap. So if we're taking into consideration that area there, this pink area here, which I don't think we should, to be fair. We're taking into consideration this trend between this yellow. I've got too much yellow, so let's make some different colors so we can separate them. Separate that one and this one, and we're going to make that one baby blue. So if we're saying that this market here is trading within this range, all right, can you see it? I'm going to make it a bit thicker because I understand it's a little bit difficult to see. Right on my screen. Yeah, if we say the market is trading within here, look, ping, pong, ping, pong. We've seen a little acceleration here, it hasn't quite pinged, hence the reason why I created this other little pink channel. Because when I get new information, I've got to take new, I've got to react from that. I've got to read and react. But either way, I'd prefer to be buying this down here or down here in discounts. If I'm not in a discount, I'm in the middle, as in the average that it normally is. That means it can do anything it wants. Or if I'm taking into consideration this blue range, I'm in a premium. I don't need to do anything. There's nobody bending my arm to say I have to hit the button right now. I'm like, I'm not too sure. Because I really would prefer to be selling this market after seeing a bigger indication, correction, and then hopefully some continuation. But I cannot get involved in that continuation if I can't see what I'm looking for. And what I normally look for is, some people call it a change of character. But after the change of character, I look for a correction, because these markets, as we can see, move in waves, up and down, up. Even if they don't want to go up, even if they just want to go up, they go up and down, up and down, up and down, up and down to get to that place that they want to go up. Even if they want to go down, they go down and up, down and up, down and up, down and up to that place, all the way down here that it wants to go to. So when I see a change of character, meaning that this is the character, look, this is your child. You know how it behaves normally. Yeah, behaves normally. Then all of a sudden you go to your grandma's house or you go somewhere and your child does this. Yeah? And you're like, whoa. Wait a minute. What's going on? We've had a change of character. But you don't slap him straight away. Okay? You wait to see what he does. He starts coming back in this direction here and you figure, oh, that's better. He's coming back to his normal character. But then you see this happen, look. And you're like, wait a minute. Wait a minute. Yeah? You say, wait a minute, this child's doing something else. Yeah? This child is badly behaved. It's changed its character. And that gives me a signal that, our little trip to Nanny's house might be bearish for the rest of the day, because this character of this child has changed. This is what we look for in the markets. And I'm saying to you right now, as this market's pushing up here bullishly, we haven't seen that. Yeah, the market at the moment is still pushing up, and even more so, it's pushing up into an area that we already said we think the market might push in there. So how do I relate that to my child? We already know that when he goes to nanny's house, he's a little bit, yeah, because he gets away with murder when he goes to my mum's house. So we kind of like, we're a bit more relaxed. We know there's going to be a little bit more jumping on the sofas that he's not doing in my house. Yeah, he's going to be a little bit more, yeah. So we give him some leeway. This is the leeway that we gave. We said that the market was going to retrace back into this 4-hour imbalance. We said there was another potential 4-hour imbalance up here that the market could go in, where we're like, that's not a surprise to us. Yeah, we're expecting that there's a possibility that that can happen. You feel me? So this whole energy here, I'm like, yeah, we kind of said it was going to do that. And if we wanted to, if you're advanced enough, you can trade that energy. You can. But for where we are in this journey, which potentially, look, is up near 50% of that imbalance and near where we might be turning around, it's just not worth getting involved right now. It's worth to see what it does. We've had this plan. Let's see how the plan pans out. How are we going to make a new plan on top of the old plan before we see if the new plan has worked or not? That makes no sense. So that's where we have something that comes into play, beginning with the letter P, which is called patience. We have patience. Someone says, how's your trading doing? What are you looking at? So I'm looking at GU at the moment. What are you looking to do? I'm looking for the sell in GU. And they go, okay. So why aren't you selling it? So I'm just waiting. Waiting to see what it does. That's what you said. I'm just waiting to see what it does. Sorry, guys. Take out the biscuit. I might apologize. One of them mornings. All right. You said, I'm just waiting to see what it's going to do. You have to be patient as a trader. It's not because you decided to sit at your table today, right now, at 9 o'clock, that the market's there. Okay, he's at his table now. It's time for us to go bearish. It doesn't work like that. I wish it did. All right. Have a look. I'm looking at over here on a 5-minute time frame. We can see higher highs, higher lows, higher heights, higher lows, higher heights. Even here, we got this break of structure on a 5-minute time frame. I'm expecting to see either a correction than a continuation. It's the only way I can get involved. The only way it's showing me that this badly behaved child is changing character. At the moment, this could have just been getting a bit carried away. I got a bit carried away. I came down here, Jay. I came off the beaten track. But if it gets back up here and starts doing higher highs and higher lows, I'm like, okay, no problem. Kids, calm down again. It's being respectful. It's not taking liberties. But at the moment, I don't know. This is a very deep retracement at the moment. But if I really wanted to be particular, that retracement has just gone and closed imbalances. Have a look. If I really wanted to be true, look, all that retracement did is close up this imbalance first, close up this imbalance second. And it got up here, look, perfectly closures. Those closures of the candle perfectly closed here in that little imbalance level. Then we saw a little wick action, which on a smaller time frame might also be closing imbalances. Who knows? In here, there might be some smaller imbalances. And I'm just wondering whether or not this market is going to respect this high and start coming down here or not. Now, because we're so small, we're already at 5-minute time frame. I really don't want to drop my time frames smaller, but I can do. See, right now I can turn and say, okay, it's higher risk. If I drop my time frame to my 1 minute now and I start looking for a indication, correction, continuation, it's higher risk. Because on the 1 minute, I'm getting indication, correction, continuation, but on the 5-minute time frame, we might just, no, go back over here. Hence the reason when I turn and say to you, when you drop your time frames down, there's lots of dead bodies that are going to reside on the 1 minute time frame. Because you have more to deal with. You have more bosses, more people you have to look up to. You're 1 minute. You're a little man. You got to look up to 3 minutes. You got to look up to 2 minutes, 5 minutes, 10 minutes, 50. All these are your bosses or your elders. Whereas if you turn around and say, okay, look, boom, I'm going to be here at this time frame. Well, you've only got a certain amount of elders that you really want to be taking consideration. Yeah, let's have a look here. I'm going to drop to my 1 minute time frame. So as part of this energy here, the market's pushed all the way back up in here. You see the difficulties now is it's difficult to see the structure in here. I can see it. It's like this. Here's a low. 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 And the question I say, have I got a closure here? Look, this was a 1 minute closure below that low indication. This was a correction. Am I going to get a continuation here? Now, I could hit the button here. If I get a closure below this wick, I could hit the button here, but I understand it is higher risk. The safest one would be to me to zoom back out over here, wait till I get a closure below this wick here of the market really turning around, saying it's indicated, corrected, and we're getting lower lows and lower highs. That would be a safer entry. I'm telling you. So you're wondering, which one do you want to do? Which one should I do, Jay? You want me to tell you which one you want to do? Well, I'm going to tell you, this depends on how you want to trade. Are you somebody who you can take this trade? It's not yet. We haven't got no closure yet. Okay. We've got no closure. If I was to show the lines on a line chart, you can see the structure more in here. All right. See here, this market's closed here. It's down to you. Like, are you a trader who you have built the resilience to be able to take a loss? Because let me tell you something. If you lose entering the trade down here with your stop all the way above here and you're risking $100, you're going to lose $100. If you lose right now, waiting for a closure below here and your stops above here or here, you're still going to lose $100. One, you're going to lose very quickly. One is going to take you a little bit longer to lose. All right. One's going to give you a lot more maneuverability, a lot more space for that market to breathe. Remember, you've also got your spread, which is the fees that you pay to the broker. This spread moves up and down like this. It's variable. Now, it shouldn't be within a big range, especially within GU, but it might be 0.7 of a pip, then it might be half a pip, then it might be 0.8, then it might be back to half a pip. It's going to move. So if you're too tight and you're too small, you could get stopped out and be correct. See, right now, even here, for my strategy, even though I've got this candle closed here, below this little level here on a very small time frame, to the point where I've had to go and draw these lines in to even see where structure is. This would be a correction. I haven't got a closure yet below this wick to allow me to hit the button. And I'm going to, just for this example, if I do get a closure, I'm going to show you it, what happens by taking the trade on a very small time frame. So therefore, I'm going to be watching it. All right. Now, I do this sometimes, normally for your purposes, for educational purposes, but also because it helps me with my management, my risk management, because I'm going to get in there and I'm going to right now, look, that distance you can see says 5.6 to that high. I'm going to make it 8. Okay. It's only an example. Yeah. And I'm going to know what I'm willing to risk. And if I get a closure below here, I'm going to put a little alert in here because I want to keep looking at it. I'll take the trade based upon a very small entry. And if I get stopped out, it works both ways because it shows you guys, rah, look how quickly you got stopped out. Do I have the guts and the endurance? Am I built of being able to lose $100, $200, $300, whatever you're risking, $50? Like that, in a heartbeat. If that trade starts to run now, and if that is the case, guys, I'm going to be looking first and foremost at this as a target. Because remember, the markets are not even down there. On a larger time frame, this market, have a look if I go to my 5-minute time frame, this market could be still pushing up. So it might decide to, in fact, let me get even deeper than that. I could look at 50% of that impulse as a target to keep me safe. So from here to here, if I really wanted to, by the time markets get down to here, pushing down here, I could start protecting my position if I'm really concerned about it. Why? Because if I'm wrong on the smaller time frame and the market actually wants to continue pushing up, 50% is a springboard of this market doing this, springboarding and deciding to go like this. So as I'm so small, my risk, my anxiety goes up, and I'm able to safeguard myself more because I'm so small. So I have a look at our strategy, keeping us safe once again. Look, we didn't get a closure below here. We got all this wick action, and look where the market is right now. Look, it's coming up here. It looked like it was coming down. All right. Still might come down. But the point is the strategy is I'm waiting for closures below structure. This was a closure below this minor structure. I know you can't see very clearly, but I'm telling you, if I drop my time frame down, you would see this being a nice. You want to see it? What? If I drop my 15 seconds time frame, you can see how this market came nicely. This was a little level down here. Obviously, it wicked. But you can see all the places where I placed my lines. Look how the market was coming down here, coming down here. All right. Now, we don't want to be down there. I'm not saying you should be down there. I'm just showing you the strategy even on a smaller time frame. This was an indication of closure below this level. Yeah, this was a correction, but this was not a closure below this wick. Neither was this wick, neither was this wick, and now this market's coming back up here to violate that correction, possibly. We ain't quite done it yet. All right. So just see how even in that, maybe previously you would have got anxious. You would have hit the button here. Oh yeah, it's going now, Jay. You'd hit the button here for the sell. Well, you would have taken it on now. But just by understanding indication, correction, continuation, waiting for candles to close, understanding the time frames, you're not in the trade. I'm not in the trade. I ain't lost no money. No monies have been lost. Because this market could very easily, as we spoke about, continue pushing bullishly to close up this big 4-hour imbalance. Trust me, this market could continue doing this and this. Now, when it gets up into here and that market is completely closed, if it does go all the way that way, then I'm going to be very keen to see what happens. If it continues pushing up and up and up and up, well, once again, all it means is that this market is not ready to go and it wants to do the hokey cokey in that big gray box. It starts pushing up in here and going higher and higher. Yeah? Starts breaking past this 4-hour and going all the way up here. And I'm like, oh, here we go. Because I thought to myself, we're ready to go, but I can't make it go. All right. Now, at that point in time, I either leave it or either, because I'm seeing lovely breaks of structure on a larger time frame bullishly. All right. Now, have a look. The issue is here is that if I was to draw some lines in here, this is the lowest point. This would be the structure here of this push down here, the first bit of structure. And if you can see here, it's only now with this little green candle, which is quite tight, we've got an indication breaking that structure. So this is all still indication on the 1-hour time frame. Let me say that one more time because somebody can't see what I'm talking about. If I was to draw some lines in, the lines would have to look like this. From this high, trying to touch some data points like so. This would be the data point, the last high before this lowest point on this time frame, because it was a quick push down here. All right. If I was to do another little line in here, if I was to get a little bit more granular, it will be like this, touching this data point here, this high, before this lowest point. Now, the market is only now here closed above that high indication. And it's not even a very prominent one at that. So even though we've had all this action here, people look at it's going up, you could have bought this. Yeah. Maybe. If I go to my 15-minute time frame, let's have a look at some structure in that little push down here. Look, even in here, we can turn when we can see, I'd have to draw another line like so. Oops, I'd have to draw another line like so from here to here. And yeah, maybe we can see some hair structure in here. That market maybe only closed above it here. And then did it really make a clean closure above? Well, not really. Kind of. Didn't really retrace. Kind of. But this was all in its sideways action. Yeah. And when we actually saw it breaking some structure, we pushed back down to here. And only now here, which we haven't got because we're getting bare wick action, might have been a closure above these levels, which we haven't got because this is wick. Okay. So like I said to you, trust in the strategy. All right. Trust in the strategy and understand that you're in control of your risk. You're in control of how you want to trade. It's better off that people turn around and say to me, this is how I want to trade. I think that's what we need to do. We need to go through one by one and we need to ask people like, how is it that you want to trade? And if you say, look, Jay, I'd like to trade between this time and this time, and I'm going to be intensively on my computer. I want to get out by a time. Yeah. Or you're going to say, I'm going to be here all day, Jay. Or you're going to say, you know what, Jay, I'm not going to be here all day. So in fact, let me ask that question. So let's go, Jason. I don't know if Jason's able to speak. Start with you. Your name just popped up there. I don't know if you're able to speak, Jay.
My best time would be in the mornings. I work. There are days such as Mondays and Tuesdays where I'm sometimes off work and I could be at the charts all day. But generally, it's have a look in the morning, probably watch something, hopefully catch my alerts. It's going to be a little bit tricky. So it's a thing where I'm going to have to try catch trades early in the morning or, yeah, maybe
Okay,
set
so
limit.
firstly, I'm going to say a few things. A, nobody wants to be on the charts all day. That's a flop. We're doing this so that we can, essentially gain our time back and gain money. All right. So even if you're got your alerts on, you want to be doing something else, but be able to react or to your alerts. Okay. Now, I'd say this: if you need to trade in the morning, I'm going to say to you this. I'd like you to be on your charts from as early as possible, from around 6 o'clock, looking for opportunities. Okay. Now, this is the energy, and you see, even things like this, guys, are things that you can backtest. All right. You can turn around and say, all right, cool. When can I be on a chart? So I've just spoken to Jay, and I'm saying like this, boom. So I'm going to put a little line in here, horizontal line, just going back some time over here. Oh, this doesn't even go all the way before that far back. This is Thursday, May 30th. And Jay's up at 6 o'clock. That's that yellow line there. All right. So, between that 6 o'clock time and what time is it you said that you got to leave for work?
I normally leave just before 8 o'clock.
It's not a lot of time, okay? Because obviously you got to get ready and stuff. You're not going to be running around with your laptop in your hand, And then when are you? Go on.
The other thing is I do work remotely, so it's a thing where I can probably have a look at my computer sometimes round about 1 o'clock and check my charts during the day. So, but I'm just gonna be on the move, which isn't ideal.
It's not ideal. It's not how I'd want you to start either. It's not ideal. So if it's not ideal, when do you get back to your charts, your computer? Is there a time you get back in the evening, or is that family time, or is there a time that you could pick out for you might want to sit at the computer at? When would that be?
It depends where I work remotely. I could be back sometimes in the afternoon, maybe about 3 o'clock.
About 3 o'clock. All right.
Yeah.
Well, look.
And sorry, there's also times where I start at 2 as well.
Well, you've got to find
my schedule's a bit up and down.
Exactly. That's what I'm hearing. All right. So I'm going to say this. Maybe, Jay, initially, get your confidence up, get things happening. Maybe you should be just looking at these markets on a much larger time frame. Okay. And, start understanding the strategy. Okay. So say for argument's sake, like this. This is GU. All right. And we saw this market come and push up here into these levels, up into here. And that would have been at the time, because hindsight's a beautiful thing. But at the time, you would have thought to yourself, okay, that market's pushed right up into a premium over here. And then you've seen a lovely reaction from this level here. Okay. So I'm on a 4-hour time frame. And we've seen this market, maybe you get down to an hour. Let's have a look at the hour. Yeah, we'll stay here for you. All right. An hour. And you've seen this market push up into a premium. This is a 10 out of 10 area of the market being up in a premium place. Okay. Location. All right. And then we've seen the market from here push up into these levels. Now, maybe what you need to be at, where you need to be in your journey is understanding that you really want to be in here for the sell. Okay. And you see the market. I'm looking at structure. Here is a structure here. In here. And market never really closed down below it anytime here. Never really had a clean closure here. And on an hour time frame, remember, never really had any clean closures here. Never really had any clean closures here. This is a wick. Market pushes back up into these levels. So now the market's voided all of this energy here. It's come back up into here. You're once again looking for an indication to break some of this structure. Potentially here, you've got a clean closure. You're waiting for some sort of correction. You don't know where that correction is going to go. That correction could go all the way back up into these levels. If I had a correction that closes this first imbalance, and then you're waiting for a closure below here, and you got it here. So maybe J needs to be in a position whereby you're looking at moves at the higher risk stop loss of the last high. Okay. But on a larger time frame. All right. Because then you could turn around and be like, I've been looking at this. I've been waiting for this. Look, have a look. This is 3, 4. You're waking up. This is that morning time, and you're going to place that trade with your stop above here. It's going to be a larger stop. You can obviously take into consideration this imbalance as well if you wanted to. But I'm just saying that maybe you need to be that trader that does hit the button and hold on the basis that you are very sporadic in when you're going to get to your charts. Now, let me explain something to you what that means. That means you're going to take the trade and you're going to be aiming for wherever. So say, for example, you take this trade here and you're aiming for, some structure. You're aiming for some real structure in here. Okay, cool. If you are taking that trade aiming for structure, the times when you do get to your charts, you can take smaller trades, okay, in line with your bigger trade that's running in the background. All right, so you've got this correct, and you come here and you're trading through, and you've gone through and smashed this first little bit of minor. This is minor structure. You smash through it. Great. Now you're looking at a trade and you're doing well. So if I push it up, you're doing well. You're at 1-to-1. You're profitable. Yeah. And then you get to this major structure here, touching on our line. Seeing the market was coming down like a missile, boom, and it went up like a missile. You cannot ignore this. This you cannot ignore. Okay. This one, and we did have a reaction from here, but what the market wasn't falling from space and then just hit a brick wall here. When this market takes this structure, what do you expect to happen next? When the market takes below this level in here, what are you expecting next?
What level? The green, where you put the green?
Yeah, when this market comes down here, look, and breaks
Close that
here,
imbalance. Yeah.
and takes this, breaks this structure here, what are you expecting next?
One indication to go lower.
A correction.
Yeah,
Because we understand that the market's moving waves. And those waves are normally taking the structure, breathing again. Taking the structure, breathing again. Taking the structure, breathing again. That's what happens.
So you're basically saying that break of structure to the left was basically the indication. Everything underneath that structure was an indication, basically.
Well, it was an indication, but what I'm saying is this. All right, because it's quite difficult sometimes. You're with me. I can hear that you're with me, but I'm just going to give it to you a bit, even a little.
I'm listening.
All right. You see, when we're here in this kind of energy here, all right, and we look left, our first point of reference. Look, have a look. Our first point of reference is all of this energy here. We've got nothing before that to make any decisions by. Do you understand me? There's nothing else here to make any decisions by, apart from when we start hitting this wall of candles. So therefore, I've got to respect what information this wall of candles is telling me. This wall of candles is telling me that there is minor structure here, there's major structure here. That's what this wall of candles is telling me. So as and when I start to break these structures, I've now broke this structure, these structures. Now, this reference point that I was referring to has been broken.
Yeah.
So after that's been broken, I am expecting to see a retracement. Now, when I get that retracement, my next point of reference when I look left is no longer this information. It's now the information that I'm here looking left. This information, these are now points of reference. Am I making sense? Because when I look left over the horizon, I see all of these green candles. When I was up here and I look left, only thing I could see is all the way across this ocean. I could see this line of information. So now when I've got this new information, watch, I'm expecting when this point here gets taken, I'm expecting a retracement again. Taken, retracement. And when I'm in here now, and I start coming back down here and I look left for my information, I'm getting my information right from over here. Do you understand? Or if I'm looking left, I'm getting my information from these candles here. This is the only information I have. So I'm saying at this point when the boat was turning, I have to look all the way across the ocean over here for my info, for my data, for my structure. But when this market starts to get bearish now, making lower lows and lower highs, at this point in time when I'm here, all of this information over here
becomes a new structure.
Becomes my information, my point of where I'm getting info from. You see? And then when that market comes and proceeds to move down here and break structure again, I know what happens next. We get a retracement. And the same way when this market's going up, if I look left, the information is here. The information is here. When this market's going bullish, it's not me looking past here, looking all the way over here. So the point I'm making to you is, like I said to you, I'm watching this, and from a bigger picture, I know what's going to happen when we break this structure. We're going to get a retracement. Then I know what's going to happen when we break this structure. We're going to get a retracement. If the market was to push up here and break this structure now, similarly, we're going to get a retracement. And then I'm looking for information here. So the point I'm making to you is that information that you're gaining it on a fly based upon what the market show you, based upon where you can find the data. When this market was all the way up here, I can only find the data back here. There's nothing in here. Look at all this energy in here. There's not on the 1 hour time frame. There's nothing in here. When this market broke this level here, it broke it with strength and speed. Boom. Because this was a level. Because the market pushed up quite aggressively from here. The market broke through that level with strength and speed. If I go to my 4 hour candle, 4 hour time frame, this is one big 4 hour. 1, 2, 3, 4, 5. Like this is one big 4 hour candle that broke through a level. But this level here isn't the same as this level. Because this level, look, the market just tumbled a couple hours and then had a little bounce. This level was falling from space with speed. 1 hour, 2 hour, 3, 4, 5, 6, 7, 8 hours of this market falling to hell. And then bang, something happened. What happened was there was huge amounts of unfilled buy orders here that said, mate, if that price gets down to this number here, around about the 128800 level, or whatever it is, whoever that price is, probably it's better than it's higher than that, 12900, buy. That's what man gave a piece of paper saying, listen, buy. When you get down to that, here, take this, take my credit card. When price gets down there, buy. So when price breaks through there, it becomes significant. Boom, broke through there. They were so happy that they broke through there They celebrated and did the candy dance on Dutty One all the way back up here, telling everybody, yeah, we made it. Come, pack your bags, let's go. We broke this level. And if you wanted to go and have a look at some of the other confluences we use, yeah, you might do something like pull out a Fibonacci. You know, have a look at what it looks like in here. Now, the only issue is in here is this could really be referred to as an impulse here. Yeah, it's a bit sketchy, but it could be referred to as structure in here. All right. Around 50% to the 618 was the retracement. Now, the market could have kicked all the way back into this imbalance. But what I would say to yourself is this, and this is what people get confused. I heard a phone call about it the other day. When the market is bearish, we're not expecting it to bounce all the way back up to the step that it fell from. That's not what a ball would do. A ball wouldn't go, if you dropped a ball down the stairs, doesn't hit the step below and then bounce back up to your hand. That would be the twilight zone you're living in. All right. What normally happens when the market's bearish is the market would bounce. Do you understand? It pushes down further than the bounce. So if I've seen imbalance that's right all the way up by the top, this is a bit bad example, but this is some structure in here. But the imbalance is all the way back up in here. Sometimes when I see that market doesn't go all the way up and close that imbalance, I understand, because I'm not expecting the ball to bounce all the way back up to where it came from. So that in that instance, it's just like, yeah, we close the imbalance, 50% of the way. Even though if there's above that 50%, I'm seeing big, massive imbalance. In my brain, I'm thinking to myself, if this market is bearish or bullish, depending on which way it's going, I'm not necessarily expecting it to bounce all the way back up, even to close the imbalance. It will come back for that another time. It just says, you know what? Sorry there, Jason. You're going to have to wait till next season for those discounts. I'm sorry. We'll give you a discount voucher. We'll give you a loyalty card. We'll let you get free, I don't know, something. But we're not going to be, selling the PlayStation 5 for that price again until next Black Friday. I'm sorry. All right? So that's what you need to understand. And this is what I'm saying to you. Is everything I teach you is building up all of these confluences. It's building up these things. So you look at the 50%. You look at the closure of the candle. You look at the time frame. You look at the structure. Are we in a premium or a discount? Like right now, for example, like this. This market's coming down here. Look, I'm going to connect this data point. Have a look. This data point and this data point. Have a look. I'm going to just draw a little line from here to here, connecting that data point like so. Approximate like that. And then I'm going to approximately pull out a bottom end. Immediately, all that says to me is that if I want to sell this market, I want to sell from that top yellow line. That's all it says to me. Just before it got to this, look, have a look. Let me show you, because I don't think you're getting what I'm showing you. I'm taking this data point here and this data point here on Wednesday, the 19th of July at 7 o'clock. I'm making that the top end. So if I'm thinking in my brain, I want to sell this market, I want to sell in a premium. The premium is that top yellow line. Have a look. How? That's where I would have been selling from. That's where my mind would have been thinking to myself, that's where I want to get in for the sell. I'm not thinking to myself, you know what, I want to sell the market, let me sell down here. It doesn't cross my brain. But if I hit the button here for a sell, have a look. Happy days. Happy days. But when I see this market start coming down here, look, and we're not quite ponging. It's giving me new information. We're not quite getting to the bottom of this range. It's giving me new information. I've got to take that information and say, whoa. Or let me do it this way. Like, what's happening now? What's the market doing now? I don't know why it's changed its behavior. I don't know. But I've got to read and react to what's going on. Look. The market, at that angle, that speed that boat was coming at, it's definitely looking a bit like it's slowing down. Still going down, but it looks like it's slowing down to possibly do this. That's what it's looking like to me. I don't know. It's looking like it's slowing. Looking like the angle that this market was actually going to hell over here, slowing down a little piece. Let's see. Oh, what a coinky dink. What? Look, if I kept doing this, have a look. When there's new information, I'm putting new data. Look, that boat is slowly but surely turning. Look at the track. Slowly but surely, the data is showing me that something's changing. And then all of a sudden, boom. Now we're coming back in this direction. You see? So I'm saying to you, like, though I'm exaggerating and I'm trying to use metaphors, etc., I'm just saying to you, you guys are equipped with the information to see and understand what's going on in the market. Do not overcomplicate. If I was in this trade here and I'm killing, as soon as this market starts to change energy, like the boat is trying to turn around, listen, I'm trying to get out at the most discounted point that we could get to. So when this market came down here, boom, if I decided to take my money down here, cool. Would make sense. Well, to be fair, I haven't got the information. I haven't got the information yet. Because I'm trying to be in real life. Here's a data point. Here, make it a different color. And then here's a data point. And then I pull it out to the lowest point here. I pull it out to this low here. Yeah, can you see this low here? I can see that the market is, that boat is turning. Let me tell you something. When that market gets back down to the other end, to the finishing line, listen, I'm taking my money. Thank you very much. Especially if on a smaller time frame, I start to see that market indicate, correct, and continue against me. And I would have been good to do so because the market kicked back up. And all I'm doing is drawing some lines. And people say, oh, you draw trend lines. The trend lines are a guide. And more importantly, the trend lines, historically, go back and draw trend lines and see how many times your market trades within that range. See how simple lines, understanding trend, why does it do that? Why do trend lines ever have any type of value? Because I'm not the only person looking at this market and seeing it trading within a trend. And there is a herd mentality. Yeah? There's a mentality that I'm not the only person to understand that this is a premium. This is why we always have to be wary of liquidity grabs. Because when an institution who knows and can see where everyone's placing their stop losses wants to, they can go and lash that money. Hence the reason why we always have to manage our risk, never be, too highly leveraged, because we never know what's going to happen in the markets. Okay. So for somebody else who's trading, like I said to you, if your aim is, remember, you can pass your challenge taking 1 or 2 trades and leaving them running for the month. You can. And if you're telling me you can't trade anyway because you have to work, well then, why are you trying to trade for 1 minute here, 1 minute here, 1 minute there? Why don't you just take that bigger trade and let it run? If you can, that's different. If you can't, why don't you take the bigger trade? Why don't you stop going down to these smaller time frames, sit around and look at this whenever you can look at it. Like you said, you're going to get half an hour in the morning, maybe a little time at lunchtime. And when you see it from a bigger time frame, your market do certain things, then you can decide to get into that trade with your stop at a higher point. Now, it's going to be a very small position, but it depends if you've got a 100K account, 200K account, 50K account. It's going to be a smaller position. But let me tell you what it's going to do. When that trade hits TP, goes to a structure that you're happy with, you're going to feel confidence that you know what you're doing. You may even decide that you prefer trading like that, looking down at your phone at work and seeing that you're up another £200. Tomorrow you look at it, you're up, oh, 450. You look at it up, oh, 490. I mean, you're not getting a 1 to 5 in 3 minutes, but you are growing your wealth within your own comfort zone. I heard someone say something. He said that, traders, they just want it so too fast. They want everything too fast. And we know what that is because you've been on Instagram.
Being guilty of it.
Yeah. Everyone. You want everything very, very fast. because you've seen it. It's possible for us. That's the thing. It's possible for us. It is possible for us. But if we just slowed down, if for argument's sake, I just took this trade here, obviously the market's coming up here, I don't know. And I just said, you know what? I don't mind if I still just started breaking structure bearishly, taking this trade, placing it above this 4-hour level in here or whatever it may be. Now this is, no, it's not even big enough. I want to get bigger. I'm going to take this trade here for 130 pips. And my goal, my target, for the month would be down at these lows over here for a 1 to 3, 1 to 4 trade. Maybe that's the one trade you take. And because you're only taking one trade in a month, especially if you've discussed it with me, maybe you do take that trade at a much larger risk parameter. Meaning maybe you have a 100K account and maybe you risk $1,000 on that trade, which is 1% of the total amount, but 10% of what you're willing to lose. Because what that means is that if that takes a month or 3 weeks or 2 weeks, you will be 3,600 up on your challenge. And that makes sense if you're only taking that one trade. Opposed to you're taking, I don't know, 5 of those trades a day, well, you're not going to make it if you lose. So I'm saying to you, I really want to give you guys the scope to, it's very easy for me to say, yeah, you should trade like this, you should trade like that. How can I say that to you if my man's out getting ready for work between 6 and 8, coming home at 2, having to pick up little man at 3:30? How can I tell you how you're supposed to trade? I can let you understand trading when the markets move. 2:30, England, London session, New York session, Asian session slower. I can let you guys understand these things. I can let you guys understand that you can take the same trades in a larger time frame, which is going to move a lot slower for you in regards to how you see your profit fluctuating. And then you're going to say, well, you have to make the decision as an adult. Okay, I can only trade on the Tuesdays and the Wednesdays, but I can actually be there for London sessions. So for that, I am going to be actively trading, or I can't really do it like this. And to be honest, I prefer not to. I don't want to be sitting in front of a computer all day. Jay does it, but I can't do it. I hate it. I need to be in the outdoors. All right, cool. So on that basis, I don't mind taking a trade if in 3 weeks' time or a month's time it's going to make me $3,600, because I don't make that working all month after tax and NI and this, that, and other contributions. I don't mind that. And if I do that continuously and make profits, I'm going to feel really comfortable and confident to do that with my own funds, knowing that when I look down at my $10,000 account and I've risked $1,000, okay, or I've risked £100, sorry, yeah, or maybe a bit more, 2%, and I look down and within a few months' time, that's £400 or £500 or £600, I'm up. I know that I didn't make £500-600 in none of my other investments, and nowhere else apart from my employed activities. And then when my account grows and I've got £20,000 in there and I look down, it's £1,200 that I've made this month. Then when I put £30,000 and I look down, I've got £2,000 in there. I know that I am confidently growing my own funds and I'm doing it within my lifestyle. But the problem is, like I said, traders want everything now. We want it all too fast. All right. If alternatively, you're able to take active trades actively every single day, manage that risk so that you can lose often. Let me say that again. Manage your risk so that you can lose often. Because if you take 20 trades and you have a win ratio of 50%, you've got to be able to lose 10. That might be 10 in a row. But you could still be profitable if you could get to the other 20. Now, I want to be able to make it so that you're not taking 1 million trades a day, but you're looking for the best trades. At the same time, you're learning. You're learning. How can I say just take the best trades if you don't know what the best trades are? You're learning. So you have to survive. But let me say something to you. If you're just getting on the charts for 15 minutes between 8:30 and 8:17, that doesn't mean you have to take a trade. You're just taking a piss. You're forcing. If you're able to be in front of the computer all day long, you take a lot of trades because you believe that this was a good area, it's a good zone, you marked it up and you waited. Whether you're right or you're wrong, that's different. But don't think just because you sat in front of your computer for 17 minutes, you got to hit 17 trades. If you're doing that, look on a bigger picture, guys. Look on a bigger picture, hit the button and just feel happy that you've got a trade running and see your target of where you want it to go to, set your TP and let it run. A lot more passive way of investing. You're not going to make huge amounts of money on a small account straight away, but you're going to get your confidence up that you know what you're doing. And if that is the case, you get your confidence up, then you can buy a big account. You can buy a 200K account and do the same thing. Hit the button for a grand and let it play for the next 3 weeks and make your 1 to 4, 1 to 5. If that's the case, you're already 50% of completing that challenge with one trade. You heard, is it Rashid? Sounds like that's how he trades. I remember him talking like that. He passed the challenge in 2 trades over 3 weeks, 4 weeks, whatever maybe. That's obviously him taking higher time frame trades and just letting it run. A very passive way of doing it, because whilst it's running, you can get on with your life. You can go on holiday. You can do your other projects. You can look after the kids. You can go and do 6 weeks holidays whilst your trade is running. So after you've done all those things, and I've passed my challenge, great. Whereas you couldn't do both. You couldn't stand here actively trade and think you're going to take kids football and 6 weeks holidays and holiday and stuff. Do you understand? So you have to just understand trading and work out what's best for yourself. Let's go back and have a quick look at that GU and finish up. We have run on. All right. Is that you can see that market didn't give us our close. Is running all the way back up over here. Still hasn't broke this structure here, but I am concerned about how deep we've got up in here. And it makes me feel that the market wants to continue to get up into these levels, into these imbalances. All right. Have a look at the economic calendar for today. Orange folders, nothing too red. The red stuff's already happened. All right. We had a consensus of 2% for inflation. It came out at 2%. We had some inflation rate stuff here. Let's have a look. Japanese yen. What's that balance of trade? Better than expected results. Let's have a look at EJ, see what's going on with EJ. Look, this EJ's market, let's zoom out and show you the lines I've already drawn in it. It's a bullish market making a bearish retracement. The question I was asking myself when I was looking at this chart is this market going to come back down into these levels, or are we going to break above these levels and start making our journey like this? At the moment, I haven't got an answer to that question because we're at the top of the range in a premium. The premium being this line here. And the market is doing what? Hokey cokey. Yeah, market is doing in here, doing hokey cokey. We heard talks from Alan that the Japanese might be intervening again, increasing their interest rates or whatever it may be. And that might be the reason why we're doing hokey cokey, because I don't know, they ain't. If they do, we may see EJ based upon whether euro gets weaker or is just as strong, who knows? We may see this market get bearish, yeah, or not, based upon all this EU stuff that's happening. Maybe it doesn't get strong enough, quick enough, and we may see us breaking outside of this premium and starting a new trend, pushing up and doing certain things. But at the moment, for me, we're right up on the top of this premium, and we're thinking about it. Look, thinking about it. This is what this is saying to me when I'm reading these candles. This is saying to me that we are thinking about it. Like we just don't know. We're accumulating orders, you know. I want to see something definitive. Obviously, we are getting lower highs at the moment, like so. We are getting lower highs at the moment, like so. And if I was going to get into this for the sell, now if I see indication, correction, continuation would be where I'd want to sell from if I needed to trade this. Yeah. The market has pushed down below this structure ever so slightly. We've broken the structure, though it's a wick on a 15-minute time frame. On a smaller time frame, it's probably a candle. And we've pushed all the way back up into these levels. So right now, this huge imbalance here has been closed as the market pinged. Have a look at this basic. The market pinged, the market ponged, the market pinged ish. And we're back up in here in the pong space. Is this market gonna continue to ping pong down in here? I don't know, but I do know if I am going to sell, now would be a time to sell it. Though I've drawn this box in, it's not a true consolidation, like I said. Well, the market, look, on a bigger picture, I suppose, yeah, the market is in here. On a bigger picture, it is in here, yes. So then we're now in the middle of a range, which is a bit like, yeah, do I really? So it's not 10. But if I think to myself, nah, this is still making lower highs, I want to get in for the sell. Here would be me turning around and saying I'm waiting for indication, correction, continuation where I need to go. This is a higher probability of it going this direction than me hitting the button down here. Yeah, I just don't love the fact of where we are on this bigger little yellow triangle. But we haven't broken 50% of it, even though this drawing, how I've drawn this square might not be accurate, but we haven't broke this 50% area. We have closed up this imbalance. So right now is deep. I'm going to put an alert in here. For me right now, is quite significant of whether this market's going to push up and break this little high here, or we're going to now turn this bolt and start coming down here, which may present an opportunity for me to get in for the sell. It may do, all right? However, a bigger concern is, have we already ponged down here and now we're just ready to go up in these levels? Maybe. Maybe even if we do want to go up, the market may go down first before going up. All right. How do I trade this? Like, look at this, for example, on the 4-hour time frame. On the 4-hour time frame, this market's made no indication, correction, and continuation to go bullish, because here's the high. Look at that. See? So if I trade this on a 4-hour time frame, looking at it, how can I be out here turning around and saying I want to go in for the buy? There's no information. And I wouldn't be wanting to buy up here anyway, because we're in a premium. If I go on my hour time frame, have a look. I'll be looking here, seeing this push down, it came into down here. The market hasn't broken this high, saying it wants to go any higher. But when I look left and look at data over here, I've got data to my left that if the market starts breaking it, it might say to me it wants to go lower. Because I've got data point, data point, data point. Yeah? So if that market comes, and we have seen a wick below here, but I get a closure below here on an hour, I'm thinking to myself, yeah, boy. Or better still, yeah, I'm thinking to myself, yeah. You know, this market may indicate I'm expecting to see a correction, whether I want to trade that correction up here and then get in for the sell. Either way, it's showing me what the market may or may not want to do. I hope you guys are getting the energy, yeah, and understanding that it's just take your time, man. Just take your time. Like, I see Jiva did well yesterday with a nice trade. Now you've got your up or whatever it may be. Take your time. Look at it. Is this looking good? Can I make my stop a bit bigger? Yeah, I'm going to have a smaller lot size. Instead of it being 10 lots, I'm going to have to be in there at 4 lots. But isn't it better that I'm 4 lots and I'm in profits, I'm risk-free, and then I can work out a way, maybe I can take another trade, or I can at least put that money in the bank, play the game. Yeah? It's better that you do that than straight away you're getting in big because you're greedy, because you want everything so fast, and you just stop loss. Hit the trade, stop loss. If you keep doing that, change something. So you know what? Instead of going above a 5-minute high, I'm going over the 15-minute high. I know it's another 20 pips away, but I'm going to do it. And then you might see that trade goes to profit if you just like, maybe that's my sweet spot. All right. Guys, good morning. God bless. I don't know if anyone wants to add anything to the call. If not, let me know. I'm going to go into YouTube.
I had a bit of a random question about the elections and what effect it might have on the markets.
I'm going to turn the mic to Alan.
Grand Rising, all it shouldn't have any effect on the UK election. Should have no effect on the UK markets due to the fact that everything's kind of priced in regards to if Labour win. The market's kind of happy and content if Labour do win, so there should be no change. However, the American election, we will have a lot of volatility come November, because Trump has mentioned some crazy things to remove income tax and have tariffs. That doesn't make any sense. That's the worst economic suggestion I've ever heard in my life. So the American election, you get a lot of volatility. UK election, no, everything's priced in.
Okay,
Exactly what I was going to say. Yeah. Anybody else got something to say? I think G-Van was going to say something as well.
No, I was gonna say, who won that Father's Day race?
Come on, you ain't seen my WhatsApp status. Go look at my WhatsApp status. I got the footage on there. Go look at my WhatsApp status.
Say
Yeah?
that.
Go look at my WhatsApp status. Yeah, I won that Father's Day race, bro.
Let's
Yeah.
go, champ.
Let's go,
champ.
champ.
Let's go, champ.
Come on. Can't lose in front of my son, my firstborn son. You know, come on. What do you think this is? Yeah,
See,
but now it's
man,
like an invitation. I got all my bridges want to race me now. I said, bro, this is the first race I've had in about 10 years, bro. Allow me, bro. What's wrong with you, bro? I'm just racing random guys. I had to race someone at my boys' football yesterday as well. I don't know. I just wanted to race for some reason. I don't know.
I know you was in the park a week before training, man.
Come on.
He said, come.
Come on. Now, I used to be quick, so I'm always thinking to myself that maybe I could keep it moving. But definitely, after having 2 little races in one day, when I woke up this morning, I was feeling the aches, bro. I'm not going to lie to you. I was feeling the aches. Listen, I'm going to put on a video. I've seen the 2 things that have popped up in my suggestions. One is the 19 Keys video that's just come out, and the title says poverty is the reason you have stress, which is interesting and definitely something else I think we can all relate to. You know, poverty is a reason why that could stress you out. Not to say that people with money don't have stress, all right, because I'm sure they do. Or there's a Dr. Umar full interview about the truth about Shaq, LeBron, Diddy, Stephen A, Shannon Sharp, and all them kind of people there. I mean, I like Dr. Umar still. I'm not gonna lie to you. We did a bit of 19 Keys. I'm gonna play Dr. Umar. Dr. Umar's gonna say something that's gonna make me think, rah. I used to fully like Dr. Umar. There's only one stain on Dr. Umar. Let me even stop.